Hello everybody. So I just want to do a follow-up video on the open range breakout. So there's a lot of different strategies around it, and I just want to share the way I trade the open range. And I'm just going to show you what's happened this week. Okay, and we're going to start with sort of from Monday, and we're going to work our way down to yesterday. So what I do is I look for the first hour of trading. Okay. So for the European markets right now, that's from 9 until 10. Okay, so here's my first hour of trading. The levels I pay attention to are the 50% of this range. Then I pay attention to the 38.2 extension, then the 100% of the range, then the 161.8% extension of the range, and then the 261.8% extension of the range. So those are the levels that I play. The most common one is the 100%. That's one that gets hit often, and then sometimes you get a trailer that'll hit these levels. Okay, so let's start. So you can see here, we formed our range bar, and then we hovered on the 50%. We broke through, and we hit this level here. Okay, but now that's at 5 o'clock. So pretty much at the close of the stock market, we came back to test, and then after hours we ran up. But we didn't quite get to the target. But that target is still open. We got there the next day. You see that? Now this is the important thing. You need to remember whether your target was hit the day before or not. And the only target you're really worried about is the 100% Fibonacci. So it's 100% of that range. Okay? Let's look at the next day. Tuesday. So there to there. Okay, so why I say you want to pay attention to that is you can see here you had a breakout, and for me my confirmation comes on the 10-minute. Okay, and you can see on the 10-minute we had a breakout, but it was hitting the previous target. Okay, and there was more than likely a level at play as well. So actually I remember there was a level. It's the daily cloud. Okay, so now just while I'm on level, so the range breakout is like think of a game of poker where a range breakout's a flush or a straight is a great hand. Okay, but a higher time frame moving average or the top of the cloud is a royal flush. So it's a better hand, and you always want to play the better hand. Okay, so you've got to keep cognizant of what happened the day before. Its target wasn't hit. It got hit, and it got hit right at the top of the cloud and the 200 moving average. Okay, now you've got to remember that every breakout of every single bar, there is a target at play. There is a target at play. So it's either the previous high, previous low, it's a moving average, it's the top of a cloud. So there's levels at every time frame, but you need to pay attention to your higher time frames. Okay, so you would have had to ignore that and play this to the downside, and you can see what happens. Okay, we fired through the 38.2, but come back to test it. We hit the first target, we hit the second target, and at the third target, profit taking starts happening. Okay. So what are we on now? We're on Tuesday. Let's look at another one. And here is Wednesdays. Okay. Okay, not exact, but you'll get the message. You see how we fell down? Right the way down to the second target. Okay. So second target hit at the close. Not even at the close. 9, 10. Yeah, so your second target was hit, and then we slowly started moving back to the upside. Okay, so at this level, again, there is a level down here. And let's not get into levels at the moment, it's going to distract us. But there is, you understand what I'm saying. There will be a level down here where this actual target was. So let's get rid of this. Let's look at the next one. And I'm looking for 9 o'clock, which is over here, this bar here. Okay, there you go. So there's my level. Back to the 50, breakout, first target hit, just short of my second target. Okay, now this works for anything. You can look at the US 500. Okay, but for the US 500, I need to drill down to the 30 because they start at half past instead of on the hour. Okay, so here's the first one. You can see how target was hit. There's the two bars that make up the range. Back to the 50. Boom, hit the target. Okay, and let's find the next one. 1530. There we go. Back to the 50. Consolidated the 38.2. Just falls short, and next day hits it. Okay. And let's do another one. Oops, wrong. There to there. Okay. See how we consolidated at the bottom of the range. Break through, hit the 38.2. Back in, and we break and we hit the third target. Okay. So let me go to, let's go to the US Tech, the NASDAQ. And let's find 1530. Okay, so here's a failure. Okay, that was a failure to the upside. You can see how we hit the first target of 38.2, but we pulled back. So there was a 100 moving average there on the 30-minute, but you'll probably find that there was a bigger level somewhere along the line of what it was aiming for. Okay, so that's first failure that you've seen. Let's delete that. And let's go to this one. So this is 1530. To 4. First target, second target, third target, hit. Okay. So you can basically do this on any time frame, well, on any index. Okay. The first hour of trading. So I know a lot of people use the first half hour. Some people use the first 15 minutes. That's fine because then your targets are short or closer, and you often have the situation where you are swinging either side of that range. So your normal price action at the open is that it tries to establish a base. So you can see towards the open, that's why it's so volatile at the open. It's trying to find a new high and a new low, and then it's going to try and break one of those to get the direction going. So once a high is defined and once a low is defined, then the price is going to continue trying to breaking the previous high or the previous low on the smaller time frames. And I'm talking on the 5, 1 minute, 3 minute time frames. And once that happens, then typically everybody will get on board with that direction that it's going. And they'll be looking for the range break targets. And then secondly, they'll be looking for any higher time frame targets. So the other thing that you need to bear in mind, and I think I didn't point this out to you, but on the DAX, let's get rid of that. And let's just get back on this one. Okay, so you see how this range bar here, okay, this was the range bar, break the downside, and we moved through the whole week, but look where we came back to. So we first came back to test the underside of that range, of that opening bar. We then came to test the midline, okay, of this opening range. So all it really is that first hour of trading, there is a high and a low put into place, and then there is a 50% of the high and low. And those are three important areas of every first hour of trading. And you can run you can do your own analysis on this. Put a range bar, go back as far back as you possibly can in the charts, and take the first hour and put in a range bar and see what happens. Okay, and how I've configured this, I've just used the Fibonacci, and I've just added the levels I need into it for the range targets, and that's how I use my range break targets. Okay, and you can see this 100% range is hit pretty much all the time. And out of all the ones that I've shown you in this video, there's been one failure. So let's call it a 70%, 75% success rate on the range breaks. Okay, and provided that you just use some logic as well. So if there's any big levels that are close to a breakout, it's not a trade worth taking. Okay, if the bottom of the range holds and it starts attacking that level again, then you've got an opportunity. But if it bounces off that level, you'd rather take the trade with the bounce from the major levels. But yeah, so I use the ranges. I don't always use a range break, wait for the break to take the trade. I will often take a trade off a level first, and then I will add to my position on a range break, or I'll just use it as confirmation. But it is a nice, easy way of getting into the market and trading. Stop losses are always on the opposite side of the range. So you can either use the 50%. What I would typically do is I'd use the opposite side. So we've broken here. So the first stop is there. And then as soon as we've come past and we've held this level here, the 38.2, and we start moving back down, then stop loss comes onto entry down here. Okay. So yeah, so I hope that helps, guys. Just the second video on the range breaks. And if you like it, please give us a thumbs up and do subscribe. Thanks for watching. Catch you later.